My next guest says that Friday's jobs report was actually a dovish elixir for asset prices after a week of conflicting catalysts on the policy front. I want to bring in 42 Macro founder and CEO Darius Dell. All right, Darius.
Good to see you, Charles.
Good to see you, too.
Me.
You mentioned the conflicting data.
Yep.
And going into the jobs report, we've seen stories of stagflation rocket. I mean, really go higher. Of course, Jay Powell said he couldn't see the stag or deflation. Where are you with this economy in general? Because, to your point, the data is conflicting.
Yeah, absolutely. So the economy is hanging in there. If you look at Q1 GDP, we had real final sales above trend at 3%. We're not really concerned about the economy when it comes to stagflation. We're more concerned about asset markets and the Fed's response to that. For now, the Fed's response has remained asymmetric, i.e., they will cut if growth slows fast enough, but they won't hike if inflation remains very above trend. We are concerned, however, if inflation continues to remain above trend, it just pushes out the rate cuts.
How much longer? Because it feels like almost everyone's right now saying it's okay. Although, listen, in January, it was the weather, right? Even though, I was shocked because economists were surprised it got colder in January. But anyway, if it stays above trend much longer, won't the Fed either have to acknowledge that or take action?
Well, they don't necessarily have to acknowledge it by taking action in the hawkish direction. It could just continue to delay the dovish action, which when you couple this with the Treasury's policy of more tight net financing conditions, could actually cause us to downgrade into a risk-off.
So you don't see the Fed hiking rates in any circumstances right now?
Very unlikely.
Really? All right, so let's talk about some of your active themes. Let's start first and foremost with growth.
Yep.
Where are we with growth? It's at least slowing down.
Yeah, it's slowing down from the very well above trend pace that we saw last year, but the economy remains resilient. We still see a low probability of a developing recession here in the U.S. economy.
Inflation? We just kind of talked about that. Neil Kashkari was talking, and someone said he sounded like the reincarnation of Paul Volcker. I mean, of course, Neil Kashkari.
Neil Kashkari?
Well, yeah, he swings like,
I'm out of here, man. I'll see you later.
See you later. But it's just really, it's hard. At some point, it feels like we cannot necessarily ignore that because coming into this rate hiking cycle, Jay Powell more or less said, I am not going to be Arthur Burns, which not only means I'm not going to cut too soon, but I'm not going to fall asleep at the wheel. If inflation is there, we will seize it. We will attack it.
Jay Powell is being Arthur Burns right now, and there's no clue to fans or buts about that. Inflation has and remains well above trend, and when you think about the leading indicators for inflation, things like productivity, unit labor costs, are all moving in a very deleterious manner when it comes to projecting the near-term inflation outlook.
Right. Policy's
getting very interesting. So for most of this bull run that we've seen since late October, we've seen both monetary and fiscal policy rowing the boat in the same direction. However, we now have monetary policy continuing to go down this sort of awkward dovish path, ignoring all of the inflation data. However, Treasury's net financing policy has gotten more materially hawkish and is likely to get very onerous for asset markets as we head into the third quarter.
It's so tough, though, for Jay Powell, honestly, to do his job with fiscal. Listen, we just had the conversation with Ali, right? I mean, money comes into the economy during presidential elections, but this time it's mind-boggling. I've got to ask you about this. I took parts of a tweet here because, first and foremost,
handsome guy.
Not only is he handsome, but he's humble. I have a pretty big brain.
Indeed.
Even among institutional investors, I cannot figure out where asset markets are likely headed based, ... I honestly feel bad for investors that lack sophistication, risk management systems to guide their portfolio during confusing times like these. If you're out there, quote, swimming naked, trying to manage portfolio risk based on how your gut tells you to feel, ... I
feel bad.
This is a serious shot at people who don't have your sophistication. So what do you say? It's maybe realistic, right? I'm just saying, Darius, what do you tell people, though? They're in the market. They're trying to make it work. What's something basic about risk management everyone should know?
Yeah, I'll answer the question I think I should answer. This is not a shot at people who lack sophistication because what I'm trying to communicate is even the most sophisticated institutional investors have no idea where the markets are going based on these divergent growth, inflation, and policy frameworks. And you need to have sophisticated risk management systems in order to make the right decisions in your portfolio. So,
but what would that be? Because here's what I see. I see a lot of times, when it comes to retail investors, they stop out of something, and the next day it's up, they get upset. It could be 6 months later, it could be down 50%, right? They're really emotionally driven minute to minute, second to second. What do you say to anyone like that who may say, hey, I'm having trouble with the market, but they're looking at it so myopically, they're never going to make money?
Well, the most important thing you need to do as an investor is to remove your emotions out of it. And the number one way to remove your emotions out of investing is to create rules and stick to them even when your gut tells you to do something different.
Great stuff.
Absolutely, Charles.
All
Always
right.
a pleasure.
Mr. Big Brain. Talk to you again later. All right, so what if a dovish Fed is not the cause of this market moving higher? Michael Kramer says that big move on Fed Day, there was something else going on. He'll explain it. Also, we'll talk about what's really happening in housing. Maybe all the economists have got it wrong.
You've been hit by